Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. US Fed holds rates even as Jerome Powell downplays recent weakness in inflation as possibly transitionary, giving no indication of a rate cut. Most auto companies report weaker than estimated sales in April. Maruti's sales fall to the lowest in 4 years. Royal Enfield witnesses a 17% dip. SEBI slaps a 1,000 crore penalty on National Stock Exchange for violating stock exchanges and clearing corporation regulations. Former NSE chiefs Ravi Narayan and Chitra Ramakrishna have also been fined. Goods and services tax collections for March jumped to 1.13 lakh crores, the highest monthly collection since the rollout. I think that's pretty positive news flow. Actually, if you look across, there is positive news flow, and we'll come to that in a bit. But first, the big news. The US Federal Reserve has kept interest rates unchanged and indicated no bias towards a hike or a cut in the future. Fed Chair Jerome Powell also played down the recent weakness in inflation, calling it transitory. Kathleen Hayes of Bloomberg News reports.
Federal Reserve's forecasts do not always come true, but it's clearly what Jay Powell is counting on now. And it's interesting because in their policy statement, they did acknowledge that inflation was falling away from the 2% target on the headline, on the core. So when Jay Powell got up to speak at that press conference, I think people were waiting to hear something along, maybe even opening the door a tidge to a rate cut. Not at all. Here's what Jay Powell said.
Core inflation unexpectedly fell as well, however, and as of March stood at 1.6% for the previous 12 months. We suspect that some transitory factors may be at work. Thus, our baseline view remains that with a strong job market and continued growth, inflation will return to 2% over time and then be roughly symmetric around our longer-term objective.
Let's jump around Bloomberg Library and look at a chart that's going to tell you the story in pictures, what Jay Powell, I think, is alluding to in words. He isn't concerned about this right-hand side of the chart where you see the two key measures. The headline, which is the yellow line buffeted by oil prices, down to 1.3%. But look at the core. It takes out food and energy. It's at 1.5%. Jay Powell said during the press conference, well, you know, there's some transitory, some temporary factors. Portfolio management services prices has to do with market fluctuations. They're down now. That could go back up. Apparel prices, clothing and shoes, extraordinarily weak. That should come up. Well, I don't know, Mr. Powell. I don't know if you shop online, but a lot of people do. That's a big price depressant for those kinds of things. Airfares is another one he cited as being temporary. But Matt Bosler from our Bloomberg Eco team in New York saying this, you can only look at these factors, these temporary ones, for about half of the drop in that core. That's not explained here. He did say that he sees the current policy stance as appropriate, so neither a rate hike nor a rate cut is needed. Obviously, President Trump begs to differ, but it's not just President Trump. A lot of people are saying there's more signs of weakness around the globe. Fed funds futures traders are pricing in about a 60% chance of a cut this year sometime.
Well, so the Fed was one big piece of news. There are some others, of course, which work out in terms of news flow as well. The trade talks, and that's part of the positive news flows. Stephen Mnuchin calls the latest round of talks as productive. This is the words that have come in from Stephen Mnuchin, and therefore that is something that should augur well from somebody who's looking at the trade war and the resolution thereof, which might help. Brexit is in news for different reasons, doesn't really quite impact the markets. And by the way, keep in mind, eye out for the oil prices as well. They've stayed lower despite the fact that the Iran waivers end today. We don't have news flow on whether there will be some bit of deference to those waivers for select countries or no. As of now, it doesn't look like. Despite all of that and despite Venezuela, oil prices also remain tepid. So that's also in terms of positive news flow that comes in, at least on the global front. Lots of news flow on the domestic front too. We'll get them to bid. But first, let's tackle the globe. Joining us on the phone line from California is independent emerging markets commentator Jeffrey Dennis. Jeff, good evening. Thanks so much for taking the time out and speaking to us out here at Bloomberg Quint India. What did you make of Jerome Powell's commentary that while the market would have anticipated some hints towards maybe some easing, not only was there no action, there was not even the slightest of hints?
Well, I think, as often is the case, the market was probably getting a little bit ahead of itself. If you consider the 3.2% first quarter GDP growth, And notwithstanding the continuing low inflation rate, I think the case for a rate cut here is pretty slim. And maybe it was a bit of a surprise to see him balancing the possibility of a rate hike and a rate cut evenly. But I think the market had got ahead of itself and was probably disappointed. And I think that probably the next move is a rate cut, but it's probably going to be well down the road. You've got to see some significant economic weakness, I think, from here to persuade the Fed to start to cut rates.
What happens to the markets in the interim? Because I was reading a note on Bloomberg, Jeff, which spoke about how the earnings seem to be much better than what the street was working with. Apple yesterday, a case in point, but up till now, from the earnings released, I think 75% of the companies have beaten what the street was working with. Does that give some ammo to bulls as far as the U.S. markets go? And what does that do, therefore, to EMs?
Yeah, certainly it gives some ammunition to the market. And to a certain extent, you've seen that coming through already, of course, because before today, you saw the S&P hit a new high, and I suspect the S&P is going to move higher from here over the next several months, maybe not dramatically so, but the earnings numbers were supposed to slow with the economy. I think the economy is going to slow. I suspect that the 3.2% first quarter GDP is going to get revised down and does not indicate the medium long-term trend of the economy, so that is going to slow. So that will challenge the market. And so it depends to what extent these earnings can be sustained. Now, I think the way this is playing itself out for the emerging markets, which of course is what I focus on, is that EM's had a very good year so far, but it's had a less good year than the U.S. Both are up very nicely, of course, into the double digits. And I think the thing you square the circle with there is that the dollar's been strong, and the dollar's strong again today on, of course, the slightly revised market thoughts about a Fed rate cut at some point. So I think if you were to continue to get decent economic numbers, good earnings numbers out of the U.S., and no hint of a Fed rate cut from here, the dollar probably stays strong. And that won't mean emerging markets will go down. It just means they'll continue to underperform the U.S. I happen to think eventually the U.S. slows and the dollar comes down and EM catches up. But certainly that's not what's been happening in the very recent past.
Okay, Jeff, we'll leave it at that. Thanks much for taking the time out and talking to us this morning.
Thank you very much.
That's Jeffrey Dennis, EM commentator. Speaking of the Fed and the earnings bit and the impact on emerging markets, well, let's see if the mood percolates. Doesn't seem to be the case. By the way, what might aid sentiment in India at least is the GST collection numbers. Record GST collection numbers in March. Then 1.13 lakh crores. This is the highest since the rollout of GST began, and this should fuel some bit of optimism. Until now, we've been questioning as to whether it made sense or not, because February and January numbers weren't the best, but the March numbers are pretty strong, and let's see if these numbers only improve further. By the way, just one quick trade-related piece of news, and we're going to talk about it on First Word in detail, so I won't dwell too much of time on it. The SEBI's co-location order for National Stock Exchange and the fine, etc. Just remember that there's no impact on trading in any of the existing scripts. A lot of conversation, a lot of questions to me on Twitter as well about what would happen to this. There is no impact, virtually no impact on any existing trade. So keep that at the back of your mind. This is for National Stock Exchange, the entity. Existing derivative contracts or trades do not get impacted in any fashion whatsoever. They may not issue new derivative contracts, and we'll get to that, so I won't talk too much about it. But keep this in mind. There's no impact on net trading in any of the existing scripts. What will impact trade today? Well, you would probably believe that the kind of lackluster sales that have come in from the auto companies could do that. Maruti, 4-year lows, as the headline stated. Eicher Motors, 17% lower. Escorts, not the best. So the lackluster sales could dampen sentiment in the markets. One would watch out, though, for the broader markets, because the slew of numbers coming out today, all of which largely would come out during market hours and therefore would keep the street on its hooks. So MRF, Kansai Nerolac, Bandhan Bank, a large bank, I mean northwards of 50,000 crores of market cap. So very important to monitor these numbers too. Blue Star from a consumption perspective, Dabur from a consumption perspective, very, very important to see what their auto sales numbers or what their volume numbers turn out to be. Radico Khaitan, Tata Power, very, very interesting set of numbers. So a clutch of numbers that will come out today, and all of which will keep the broader markets excited. Not too many nifty names, in fact zero nifty names today, but a lot of broader market stocks which should keep the broader markets excited. However, what will be important to monitor today at 9:15 a.m. in terms of companies that have come out with numbers, aside of Britannia, which was in line, TVS Motors and Ambuja have missed estimates. And let's see if there is a reaction on both of these names in the session today. The sales slowdown continues for Maruti. As we said, the total sales at 143,245 units, which is down about 17% on a year-on-year basis and is at a 4-year low. Let's see if there is a further impact on Maruti Suzuki, which has been on a continuous downtrend from the time it hit about 7,300, 7,400. Very strong numbers from this company, DCM Sridham. Q4 numbers reported. Revenues up 20%, net profit up 484%, EBITDA was up 365%. And by the way, this is not a tiny tune, it's about 18 and 900 crores of revenues on a quarter. EBITDA margins about 21% versus 5.4%. Should see a strong reaction. Indian Hotels could see a reaction as well. Let's wait and watch what happens there, because the numbers seemed okay, 22.8% from 21.4%. That's the most important thing. People have been waiting for Indian Hotels to be improve their EBITDA margins based on the operating leverage that they have. They haven't quite done that in the past. This quarter is pretty interesting. Let's see if Indian Hotels reacts. Dewan Housing Finance, I don't know which way it will react, but the rumor on Tuesday was that it will default on some of the payables that it had later on in the evening. News came out, it has paid mutual funds. So let's see if there's a reaction thereof. And lastly, the common saying that comes out at the start of every May is sell in May and go away. It doesn't quite work that way for Indian markets, but we'll be watching out whether that phenomenon happens. It's a very volatile month for sure. Let's see if the sell in May and go away phenomenon happens for India. It hasn't quite happened in the past. Let's see if it does happen this time around or no. However, let's tell you what's lined up on First Word today. SEBI's 1,000 crore penalty on NSE stiff, says Vikram Limaya. Sajid Mangat will bring us the highlights of SEBI order and the NSE chief's reaction to it. Waiting for the Finance Ministry's approval may have cost NBCC the JP Infratech bid. Vishwanath Nair will tell us about that. And Maruti Suzuki's sales fall to a 4-year low in April, and there are quite a few other automakers giving it company. Yatin gets us more on that. First, the big news that happened post-market hours. The market regulator has fined NSE about 1,000 crores for violating the stock exchanges and clearing corporation regulations in the co-location case. SEBI has also barred the country's largest equity exchange, or barred the company's largest equity exchange from accessing the capital markets for 6 months. Sajid Mangat joins us now with more. Sajid, what are SEBI's findings and what does it mean for National Stock Exchange?
Okay, this case pertains to 2010 to 2014 as far as co-location is concerned, and then there's a dark fiber case which comes in 2015. There was a whistleblower letter which brought to light the kind of issues which were there in the co-location, basically selective access to some of the brokers to the co-location ports, selectively allowing unauthorized vendors to lay dark fiber. All this brought into question the corporate governance standards at NSE, as a result of which we saw the entire top management of NSE being replaced. SEBI in its order now has said that though it has not been able to find any concrete evidence of fraud or unfair trade practices, there is an issue with respect to inadequate due diligence, lack of fairness and transparency as far as providing services to all market intermediaries. As a result of which, it has come out with a reasonable reasonable penalty, and according to them, the reasonable penalty would be that the entire revenues which they earn from co-location between 2010 to 2015 that comes should be paid out as disgorgement. They've taken the net profit margin of NSE, average net profit margin of NSE during that period of time, which was around 77%, and came out to 625 crores, and with an interest of 12%. from that year. So it totally comes around 1,000 odd crores
1,000 crores
for the co-location case alone. In the dark fiber case, there is a 100 odd crores penalty which is coming to NSE. So together 1,100 crores of penalty that comes in. Now NSE has the option of looking for a legal recourse with respect to challenging this order at SAT. But there are pros and cons for the challenge as well. He's been waiting for the last 4 or 5 years to get an order because his IPO has been stuck since because SEBI has not been able to approve the IPO pending this entire investigation. Or what NSE has told us is that 1,100 crores is the thing which the board has to decide. The exchange has been earmarking its entire co-location revenue into a separate escrow account for the last few years. So it is sitting on a cash which it has kept for the purpose of this contingency, even though it is under the guidance of SEBI.
So this came out in the conversation with Vikram Limay, because I think you spoke to him, the
Yes.
current MD and CEO of NSE.
Yes.
What did he have to say about all
So
this?
Limay was happy that there is a finality and conclusion to the entire process. He's happy because one, they didn't know where this investigation was heading. There were so many figures, there were so many campaigns going around saying that there's a 60,000 crore scam and other stuff which is still going around there. But SEBI's investigation made two things clear. One, there's no fraud in it, and so NSE is only found guilty of lack of due diligence, governance standards and all, which in the last few years after SEBI board has replaced the top management, the governance standards have been put in place. The new CEO has come in there, he has put in his standards there. So from that point of view, there's much more scrutiny on MD and CEO and the governing board now, because now they have to certify everything which is going to happen. Limay also told us that in the last few years NSE has deposited nearly 2,400 crores to that escrow account. Now they're taking a legal opinion whether they need to continue doing it, because now they know the total liability. Liability is maximum 1,100 crores. If they go for an appeal, then the 12% interest gets added on to it
Every year, yeah.
So they know the finality of the or the framework of how much can the liability can be in that sense. So that's they are aware of, and so they'll take a call on that. Second thing is on the issue of IPO. They said that NSE has been barred from accessing capital markets, which means that the IPO cannot happen. But Limay says that 6 months is a good time for them to prepare, because by October end, when this entire bar gets removed, they will be ready to file the DRHP fresh with SEBI and go for an IPO, and maybe end of December if they get an early approval, or early 2020. There's a big if NSE does not contest this disgorgement order. Now this 1,100 is one of the biggest disgorgement which SEBI has ever asked for, and it's going to be challenged because of the amount, because NSE itself is very surprised by the total amount, because there's no fraud which has been proved. It's only lack of due diligence and some governance standards, and which has been corrected, which the exchange said. The second part of it is derivative products portfolio. NSE got into commodities in October 2018. It was trying to expand its product portfolio. Now it won't be able to do that for next 6 months. They were planning to come out with agri and non-agri products in the next couple of weeks and months. Now that goes on hold because of this SEBI order, because SEBI has barred them from derivatives market for 6 months. They're willing to take that thing. They will be behind the curve because the competitors MCX or BSE would have introduced all those agri and non-agri commodities, and there will be a lag for them there. But they're willing to see it through if they go for the order, or if they challenge whatever it is. The final thing, which is the SGX case, which has been going on, and NSE has been very categorical, saying that this order does not impact the NSE Gift City Exchange, because NSE Gift City Exchange is a separate exchange governed by separate rules. So NSE and those Gift City Exchange is different, because the issue is that they're trying to transition the entire liquidity in Nifty futures, which is there in SGX, to the Gift City Exchange, and the order will have no bearing on on that negotiation which is going on between two governments, the RBI, SEBI and MAS, which is Monetary Authority of Singapore, and the two exchanges to create a Ahmedabad Singapore Connect. So that is going on as we speak. So it's not going to have an impact. So if you, in a nutshell, it's a good thing that this order has come out for NSE. To one, there is no fraud. Secondly, there is finality of the cost amount which is there. And thirdly, investors know that there is now there could be a timeline of an IPO. We've seen a lot of OTC deals happening in NSE, existing investors selling off because they didn't have any clarity when the IPO is going to come in.
Now there is a time.
Now we could see our OTC market going up, heating up again ahead of the IPO, which is going to happen.
Okay. Sajid Mangat, thanks so much for putting that into perspective. We, of course, spoke to Vikram Limaya, and during the course of the day, you'll be able to hear that entire conversation with the MD and CEO of National Stock Exchange. And, of course, the story is there on the website as well, so do log on to bloombergquint.com and try and read up on this piece of news as well. Very important from a stock exchange perspective. The next piece on First Word, NBCC's dilly-dallying on bidding for JP Infratech has meant that the committee of creditors, including home buyers, are forced to vote on just one bid. Ironically, the finance ministry has said that the NBCC did not need any approval to bid. This comes as a time when the state-run developer submitted a bid but said it needed approval from DIPAM before the creditors could consider its offer. Vishy has been tracking this process, joins us for more. Vishy, good morning.
It's a crazy process. Good morning, Neeraj. But it's been going from one end to the other almost every day. So what we understand is yesterday, on the 1st of May, NBCC wrote a letter to the resolution professional at JP Infratech saying that it has received all of the necessary approvals that it was supposed to receive before bidding for JP Infratech. Now remember, this all connects back to 26th of April when they submitted the revised bid, but asked the lenders not to vote on the revised bid, saying that because we have not yet received these approvals, we don't feel that our bid can be voted upon at this point in time. Now, there is a specific regulation within the IBC which says that all necessary shareholder approvals, government being the largest shareholder in this company, needed to be received before the bid has been submitted. So according to the RP, it is not compliant with the IBC regulations, and therefore NBCC's bid was rejected at that point in time. What followed was on the 30th of April, the COC started voting on Suraksha ARC, which was the only other bidder in the case, and the bid they have submitted has been going on for voting at this point in time. That vote will end on the 3rd of May. Now, what the resolution professional has replied to the NBCC guys is that the voting process is already on. Now, we cannot stop it and insert NBCC in the middle. So what we suggest is let the voting get over on the 3rd of May. And if that 66% voting threshold is not met by Suraksha ARC, then probably we can consider the NBCC bid. But interestingly, in the whole thing, we accessed the letter by the finance ministry, which was very clear in its explanation, saying that it did not need to give any approvals in the first place. The thing is that NBCC is a Navratna, which is a large public sector enterprise, and having that status, NBCC is empowered to take these decisions by itself. Also, as part of the resolution plan, which it had submitted to the Ministry of Finance for review, the plan says that they are going to infuse about 200 crore worth of fresh equity into JP Infratech. That's a proposal. But this 200 crore investment is going to be less than 15% of NBCC's own net worth. The 15% of NBCC's net worth would have been about 273 crores, so this is below that. And the government has said that since it is already below that 15% mark, it is not even breaching any internal sort of limits that we have placed on government agencies. And of course, you're a Navratna, so you can take these calls by yourself. We don't need to intervene in the matter at all. Now, what this has added to is an additional 4 days of delay for NBCC from the 26th to the 30th of April, because of which now NBCC's bid cannot be considered, at least in the current voting structure. Remember, the whole process for JP Infratech, the second time that the insolvency process has been going on, will end on the 6th of May. So any decision that the lenders need to take needs to be taken before the 6th of May, after which they will file a case with the NCLT saying that this is the bidder that we've chosen, and therefore the company should be handed over to this bidder. And of course, the NCLT process takes its own time, but you know, at least from the lender's point of view, they've completed their duties. Now, what we will be tracking is there is a meeting that is happening later today of the COC. Now, if you remember, the RP responded to in NBCC. The COC is yet to come to its own conclusion. So, the final call in the matter will be taken by the COC, and they will decide whatever needs to be decided in today's meeting. Okay. This meeting includes home buyers, and the home buyers are also having some kind of a press conference about noon today, where they're going to talk about the dark horse in the whole situation, which is the old promoter Manoj Gaur, who, according to them, is trying to make inroads and trying to buy the company from the backdoor entry. So anyway, bunch of moving balls still. There's 6th of May, as I said, is a deadline. So some resolution needs to be reached before that if we want to avoid liquidation.
Well, let's wait and watch how this plays out. Thanks, Vishy, for bringing us this exclusive piece of news. The last piece on First Word today is the going getting tough, getting much tougher for automakers in the month of April as well, with all the companies reporting thus far, reporting a drop in sales so far, be it the country's largest car maker Maruti or tractor makers and Royal Enfield. Yatin Bhutta is here to put these numbers into perspective. Yatin, good morning. Unfortunately, not a good morning for shareholders in the auto companies.
Yeah, shareholders in the auto companies will surely see red as far as most of these auto sales numbers are concerned. In fact, I am also looking at Maruti Suzuki, which reported a 17% drop in their monthly sales number. More importantly, if you look at Maruti Suzuki, their monthly sales came in at close to 1.43 lakh units versus a level of 1.72 lakh units. Clearly, that is one segment which has seen a decline, is the mini and compact car segment, a double-digit decline seen there. Of course, we have the Kia sales also, which have fallen by nearly 45% on a year-on-year basis, giving the total overall sales for Maruti a decline of nearly 17%. Of course, the silver lining here only was the Brezza and the new Ertiga sales. We have seen a 6% increase there. But if you look at the sales numbers, it has been lower than the December level. So at a 4 month low is what the April numbers look like. In terms of decline in sales, this is the last 6 months trend, the largest ever drop. Till the last 4-5 months, if you can see it on your screens, we have seen a flattish trend. 1 or 2% plus or minus is where the sales figures were. But look at April, the kind of bar that is emerging, a steep 17% decline. Of course, if you look at the percentages on a multi-year basis, this is one of those months which has seen the steepest fall in the overall sales numbers for Maruti. So this is Maruti for you. Of course, Escorts as well as Royal Enfield also came out with their monthly numbers. Escorts sold a total of 5,264 units. Again, we see a 15% drop there. So after a lot of months of good sales numbers, Escorts also has seen final slowdown coming in as far as the overall April sales are concerned. Royal Enfield broadly on the expected lines, a few thousand units lower than the expectations. But again, the street was already working with a 12-15% kind of a decline. Overall sales for Royal Enfield in the month of April fell nearly 17%, and that's not the case with the listed players. Even the unlisted players have seen some bit of pressure coming in. Honda cars also saw some bit of decline. Their new Santro. All of these listed, unlisted players have seen some bit of decline in the key segments. However, the new launches for Suzuki motorcycles plus a slower, or a lower base was something which had to do with the growth coming in. But on an overall basis, we have seen some bit of slowdown coming in for most of these auto companies.
And Maruti is the real shocker, isn't it? I mean, that's the big one, the big elephant in the room, which is why it was important to have this conversation right now. Yatin, thanks so much for putting this into perspective. I'm sure we'll talk to Yatin during the course of the day, and tomorrow when the entire sales numbers are out, I doubt if anything can disappoint more than what Maruti has, but let's wait and watch. Yatin would have a handle on that for sure. That's all that we have on First Word today. Lots more lined up on Indian Open. We talk about markets and macros with Rajat Jain of Principal Mutual Fund. Decode March quarter earnings with Sudhin Choksi of Group Finance, SK Hota of Canfin Homes, Sandeep Kishore of Zensar Tech. But after this break, full tilt towards the day's trade.